Rivian is trending in a big way after hosting its highly anticipated AI and Autonomy Day, an event packed with bold reveals that signal the company's ambition to evolve from a premium EV maker into a full-stack autonomy and AI innovator. The announcements triggered a wave of excitement across investor circles, along with a healthy dose of skepticism as traders debated what this future means for Rivian's long-term trajectory. At the center of the buzz is Rivian's first ever in-house silicon chip, the Rivian Autonomy Processor, RAP1, and its accompanying Gen 3 Autonomy Computer, ACM3. These components represent a major strategic shift as Rivian moves away from relying solely on Nvidia hardware. RAP1 is specifically designed for real-time perception and decision-making, enabling faster processing of sensor data and ultimately giving Rivian more control over cost, performance, and integration. Community members are comparing this move to Tesla's FSD chip transition, viewing it as both a massive opportunity and a massive engineering challenge. The new sensor suite also grabbed attention. Unlike the current R1 lineup, Rivian's upcoming R2 and R3 models will include LiDAR in addition to cameras and imaging radar, giving the vehicles a more robust 360-degree understanding of their surroundings. Bulls argued this hybrid sensor approach helps Rivian leapfrog Tesla's vision-only system. Bears counter that it adds cost and complexity at a time when Rivian is already under pressure to tighten margins. Rivian also introduced its large driving model, a foundational AI system trained on billions of real and simulated miles. This model will underpin Rivian's future autonomy stack, enabling smoother decision-making, better prediction of road scenarios, and more intuitive driver assistance. Fans of the brand are hyped about Rivian betting big on AI, while skeptics point out that training and deploying these models at scale is extraordinarily expensive. Another standout announcement was Autonomy Plus, Rivian's new hands-free point-to-point driving feature. It's being priced as either a $2,500 one-time purchase or a $50 monthly subscription, which investors immediately recognized as a potential recurring revenue machine, a strategy similar to Tesla's but at a more attractive entry point. The offering also highlights Rivian's intent to diversify beyond hardware sales. The company didn't stop there. Rivian revealed an upcoming AI-powered in-car assistant, leveraging LLMs to provide natural voice control, automate common tasks, understand context, and sync with apps like Google Calendar. The community sees this as another step toward positioning the vehicle as an intelligent assistant rather than just a car. Finally, Rivian reiterated its long-term Level 4 autonomy roadmap, claiming the company is building all the necessary hardware and software foundations today. Bulls say Rivian is quietly catching up to Tesla and Waymo faster than most realize. Skeptics argue that L4 autonomy remains expensive, heavily regulated, and still years away, making it risky for a company that is not yet profitable. Overall, Rivian's AI and Autonomy Day has opened a new chapter for the company. Investors are currently split between two camps. The optimists. Rivian is becoming an AI robotics powerhouse, not just another EV maker. Vertical integration, chips, sensors, and software will drive future margins. Autonomy Plus could become a massive subscription revenue stream. The R2, R3 hardware platform puts Rivian in a stronger competitive position. The skeptics. Rivian still faces high cash burn, rising debt, and negative gross margins. The EV market is slowing, making this an expensive time to scale autonomy. Execution risk is extremely high, especially competing with Tesla, Nvidia, Google, and legacy automakers. Delivering L4 autonomy remains a long, costly road, making it risky for a company that is not yet profitable. Whether Rivian is gearing up for a new era of AI-driven leadership or overextending itself at the worst possible moment is now the hottest debate in EV investing, and it's keeping RIVN at the top of trending tickers.
The stock has an underlying trend that is strongly bullish. Yeah, its 200-day moving average is sloping bullishly upwards, and just like the broader market, it got a bounce on the 21st of November. They held it for, that was, it had a strong spell then, and it's now contracting it, and the algo seems to be suggesting that it might continue this contraction up till Tuesday the 16th of December. Then after that, it might go into distributive contraction. Yeah. Let's see now. Momentum is also expected to continue to decay, but might begin to pick up from the 19th of December, but may not be as strong as it has been of late, or not as strong as it was in late November. Yeah. Okay, projections are currently saying, let's see what we have: 19.69, 21.88, 23.24. Okay, let's just quickly glance at its 4-hour chart and see what's going on there. In the 4-hour chart, lower prices are expected to keep printing up till Tuesday as well, the close of Tuesday the 16th. Then it might attempt to, consolidate with an accumulated bias, at least from the 19th. The 40-day move now, 40-period moving average is also declining, currently contracting, attempting to contract any impending impending bounce, any bounce that might occur. That's why you can clearly see here, it's looking tapered here. So for now, if it attempts to bounce, it might be resisted. Okay. Projections are saying on this 4-hour chart 17.19. Previous projections included 17.4, 17.73, 18.74, 19.38, 19.78. Yeah. Volume so far is way above average, up to 20 million shares above average. Yeah, more than 20 million now. Okay, so it's down 8.31% today. Okay, see what you make of RIVN, and thank you very much for watching this video.